Hey guys, I'm Roy LaChapelle and welcome to this week's Real Estate in Review, where I break down 2 to 3 Canadian real estate articles, share with you my thoughts, and go over what's happening in the world of real estate this week. Let's get right into it. This first one's from the Financial Post. Home prices to end the year 8.5% higher despite Bank of Canada rate hikes. Now, this is a Royal LePage forecast. They do predict that home prices will be cooling down because of this rate hike. However, they still believe average sale prices will be up year over year. So they're predicting a rise of 8.5% compared to the fourth quarter of 2022. So fourth quarter 2022 compared to fourth quarter of this year 2023. They're saying because of the strong activity and price appreciation in the first half of this year, that it boomed so much, even if we do dip or prices flatline, we're still going to be up year over year. They're saying that they expect prices to slow down, but actually still grow in the fourth quarter here. They do also say that demand remains strong despite the rate increases, and a big part of it may be because of people who have locked into an older interest rate. So you get pre-approved, you lock into an interest rate back in May, interest rates go up in June, interest rates go up in July, you're still locked into that May price for 4 months. So you still have until September to use that old rate. So this might be why demand is still kind of high right now, and we may not see any type of drastic change until September or October. So that's kind of what they're saying, and that's why demand remains strong. Something I wanted to do for you guys before leaving this article was break down kind of what they're talking about. So we're going to have a look here at average sale price in Halton and Hamilton. So I know this is not the Canadian real estate market as a whole, but it is Halton and Hamilton, any residential property, whether it's detached home, condo, townhouse, anything like that. I just took the average sale price of those two regions here in Southern Ontario. And what we noticed is February 2022, you'll see here, average sale price was $1,260,000. That was at its absolute peak. That's the highest sale price it's been in the last couple of years, even compared to 2021. And we noticed at the peak in February, shortly after they started increasing interest rates. And as you can see, every time they increase rates, month over month, it decreased all of last year. We saw a decrease every month, pretty much for the most part, until it came down and hit the absolute bottom at $901,000 back in January this year. That was the bottom of the market. The lowest prices have been in a couple years, and you can see the trend, right? Every time rates were increasing so much last year, and it really pushed that price down to $901,000. Funny enough, in January 2023, this is when they stopped increasing interest rates. You'll see shortly after, February and March took a huge jump back up to over $1 million in average sale price. And then we saw April, May, and June, these 3 spring months, really boom, multiple offers, home selling over asking. So this is kind of what they're talking about. They're comparing the last 4 months, so the fourth quarter of 2022, where prices were at 901, 937, 953, 984 at the lowest. They're comparing that to what's coming in the fourth quarter of 2023. So it's accurate. It is what it is, and based on these numbers, and this is what they're saying, prices have increased so much in the first quarter of 2023 that even if they come down a little bit, they're probably not going to be as low as they were at the end of 2022. This is what they're saying. Prices are still going to be up about 8.5% compared to the fourth quarter of 2022. Very fascinating chart. I love looking at this chart. It really goes over, I think it shows us what what is happening in real estate, what happened over the last year, and then it helps break down what Royal LePage is talking about, what these economists are talking about when they compare fourth quarters year over year. So this is what they're talking about. I think this gives a great picture of what's happening. So the second article is from Better Dwelling. Canada's rising unemployment is a foolproof recession signal, says the Bank of Montreal. Basically, the country's latest job report showed huge job gains in June. However, we are still seeing a rise in unemployment, which caught the eyes of BMO's chief economist. So a total of 60,000 jobs were added in June, but that still wasn't enough to stop the unemployment rate from climbing up to 5.4%, which is up 0.5% from the cycle low. So the U.S. actually has a rule that predicts the start of a recession by looking at the 3-month moving average of the unemployment rate, if the moving average rises 0.5% from the 12-month low, then technically a recession has begun. Canada's moving average is at 5.2% in June, which is up 0.3 points from the 12-month low. So in order for a recession to technically be in play, it's 0.5 points from the 12-month low. And right now we're at 0.3 points from the 12-month low. So we're not quite there, but we are getting close to signs of a recession. And I think the reason why this isn't talked about as much is because we've had such a boom in population growth that it's actually been outpacing the amount of jobs gained. So it's fascinating. I think people see the amount of population growth we have and think it's great, and we have so many jobs available and job growth is great, but we've actually been growing as a population quicker than we can provide jobs. So we're outpacing that job growth, which is so fascinating. I read that in a previous article, which I thought was pretty interesting, that we're growing too fast that we can't keep up with job demand. So it's quite interesting to see that. I'll add one final note here. Canada does typically see a large population boom before recessions. We saw this happen in the 70s and in the 80s, which I think is why they're a little fearful. There are about 2 to 3 signs that are pointing towards a possible recession. Now, I'm kind of just reviewing this article. I don't have a huge point or opinion on this. I think it'll be interesting to follow along, see how our population to job growth sort of compares. So, take away with this what you will. I'm not trying to sort of put fear into anybody, but just reviewing these articles and trying to make best of what they're saying and put it in simpler terms. So hope you enjoyed this one. This is Better Dwelling and the Rising Unemployment. Well, there you go, folks. Thanks for tuning in to this week's Real Estate in Review. I'll see you guys next week where I'll break down more articles and give you my thoughts on what's happening this week in real estate. We'll see you next time.